What's happening, guys? Welcome to another video. It's Emmanuel from LiveFree FX. Hope you're doing well. In today's video, I'm going to be diving into a fundamental aspect of price action trading, and that is multiple time frame analysis. Whether you are a scalper, day trader, swing trader, or even position trader, multiple time frame analysis is just one of those things that you have to do in order for you to be able to make the right decisions when it comes to executing your trade. And in this video, I'm going to be walking you through step by step on how you can actually do multiple time frame analysis effectively in a way that will go about increasing your overall probability in your trading. Let's waste no time. Let's jump right into the video. Multiple time frame analysis is using different time frames to anticipate where price is likely going to go. And what you notice there is I didn't say predict. I said anticipate, because as a trader, your job is not to predict. It's simply to anticipate where price is going to go. And when it comes to doing multiple time frame analysis, a lot of traders, especially beginner traders, have this concept in mind that if I am a skilled trader, I should be able to predict where price is going to go. And that's really not the case here. That's not your job. Your job is to anticipate. So it leads us to the very first step when it comes to multiple time frame analysis. You want to let price action guide you. So we're taking a look at pound dollar 1 hour time frames. You generally don't want to start on the lower time frame. You want to head over to the higher time frame. Whether you are a scalper, whether you are a swing trader, you want to get confirmation, big picture confirmation from the higher time frame. The 2 or the 3 time frames that I recommend to start your analysis from is either the monthly, the weekly, or the daily. I personally prefer to use the weekly time frame. So if we take a look at the weekly time frame here on pound dollar, the 2 main aspects of price action that we're going to be using is identifying the trend and figuring out, the market structure. Here on the weekly time frame, we can kind of see that overall we have a bearish trend in play, but the last couple of weeks we have been maintaining a bullish bias. The next thing you want to take a look at is the market structure, right? Because the market structure will give you further insight as to what's happening. We know that when buyers are in control, they are targeting the highs, right? Making higher highs and higher lows, making higher highs and higher lows. And when sellers want to come into the market, the first thing that they do is they target the low, and then more sellers come into the market in that fashion. So in this case with pound dollar, the very first thing we notice is that the last 2 weeks we have now broken the buyer's market structure. So what that tells me is that there's a possibility that we could be moving lower on the higher time frame. We look to the left here. Okay, what are the possibilities? What happened? What caused this possible price rejection? And we can obviously say this was an area where price rejected in the past, acted as support, now played as future resistance. So we can take a look at this as that. Let me actually use this. The next thing that we want to do is take a look at some of the points of major rejections, right? You want to identify your zones. And when you're identifying your zones, as always, I like to put 2 lines there. So when you're identifying your zones, you're looking at areas where price have rejected significantly. And we can still see that this area have been areas where price have significantly, rejected. So there is a possibility that we could still be trading up into this level if buyers want to continue. But as of right now, we have broken the overall buyer's market structure. So with that information, we go over to the daily time frame. And what you notice on the daily time frame is simple. We were trending higher, more buyers were in control, higher highs, higher lows. And now what's happened is simply price has now taken out this low. We got to pull back. So as I take a look at this, as I take a look at pound dollar in the daily time frame, now my brain is probability. Let's focus on the probability. What is the probability of this happening over this happening, right? So we can see that in terms of the candlesticks, sellers are more dominant, and the market structure is also bearish as well, as price is now going lower lows, lower highs, lower lows, and lower highs. So as the market is moving, what I'm anticipating right now is a break of this low. When this low is taken out, I am also anticipating further lows to be taken out, because that's simply what sellers do. So we can map out all these lows. You can also draw your support and resistance level as well. And these are just areas where, you know, price have rejected in the past. You can make these support and resistance areas, or you can make it zones, right? By, you know, identifying a larger area on the chart where price could possibly reject from. So now we scale over to the lower time frame, whether you want to do the 4-hour time frame or even the 1-hour time frame. It depends, you know, you can just go down from one time frame to another. So we're on the 1-hour time frame, and simply, yeah, what we're looking for now is just areas on the chart where price is going to possibly give us an entry point, right? If the market is trending lower, we know that sellers are not just going to go all the way down. What we can likely anticipate here is either some sort of pullback into this level, and then we can get further continuation over to the downside. So I know that based on the overall time frame, based on the overall trend, on the higher time frame, we're likely going to be going lower. So on the 1-hour time frame, on the 15-minute time frame, on the 5-minute time frame, my objective is to find confluences that will allow me to be a seller. And this is where your particular strategy comes into play. Your strategy is essentially what allows you to execute. But now, because you understand the higher time frame perspective, you're simply looking to now go over to your execution time frame and make that trade. So when it comes to doing multiple time frame analysis, that's one of the main things that you want to keep in mind. Gain some higher time frame perspective and just work your way down. Just work your way down. And we know that now, if price by any means now fails to continue moving lower, right? Until price does this, let's say break this high, we're not going to be buying. But if the market now all of a sudden decides that it doesn't want to reject at this area that we've mapped out, and price decides that, okay, you know, starts going higher highs, higher lows, high highs, high lows, and then takes this, we know that there's a strong possibility that more buyers are likely going to be coming to the market, because when buyers are in control, they target the highs, and when sellers are in control, they target the lows. So right now we have identified that pound dollar, based on the analysis that we've done, is a seller's market. So on the lower time frame, you want to be a seller. Taking a look at pound yen, one of the very first things that we can see on this time frame here is that the trend is up. Buyers are in control. The next thing I like to do is I want to take a look to the left here. So taking a look to the left of your chart is an important aspect of doing multiple time frame analysis, or even just being able to look at the market overall, because you want to see if price is at any area of interest. And what we can see here is that, yes, the market is at a significant area of interest because it's tapped into a previous resistance level and we are now rejecting. Based on that information, what I'll do here, if we are likely going to go into a reversal, price is also going to be taking out this low. So right now, seeing what price does here is important, and this could possibly be a target. Let's see. So we go over to the daily time frame. We know that if more sellers want to come to the market, they're going to have to take out this low. But based on what we see right now, do we have enough confluence to even be a seller? Personally, right now, I would say we're still very much in a buyer's market because we haven't necessarily broken any market structure overall. Like, I mean, some people would say this was a break of market structure, but because the candlesticks, I need at least, 2 to 3 candlesticks at the very least, right, to form a low for it to be a respectable break of market structure. So for me, until this area, 176 has been broken, I likely wouldn't look to be a seller. So what I'll still be looking for as I continue going over to the lower time frame is ways that I can be a buyer, because until this level breaks, the high probability is still on the buy side. But it doesn't mean you can't make money selling. You can probably make money selling, and the market will likely even drop lower. But as a trader, goal is not to be in the market when the pullback is happening, right? Some traders like to counter trend trade and they make money counter trend trading. But personally, for me, one of the things that I just like to do overall is just be patient and just wait for the trend to resume, right? So when you identify a move like this, your thought process is, we know that on the higher time frame, buyers are still in control, but on the lower time frame, we're seeing a change in the overall market structure. Price is now creating, a high, lower low, lower high, and we're likely going to see a lower low follow. So with this in mind now, if you're going to be taking advantage of this trade and putting yourself in the highest probability where you want to win, what you simply wait for is the overall market structure to now shift. So if price does end up trading down further, you're going to simply be looking for price to, make a lower low and switch, right? Buyers take out the high and continue moving higher. And this is where you can likely look to start getting involved in the trade. Or if the market does this and skip all of that, right? Takes out this high, maybe breaks above this level, and then boom. So you continue. So this is how you essentially keep your bias out of the market, by simply just anticipating the different possibilities that price can take in any particular situation. And that's the video, ladies and gentlemen. Thanks for watching. Hope you found the video insightful. As always, it's important to remember to practice what you learn, because that's the only way you're going to get better. On your way out, don't forget to hit that like and subscribe button. And as always, I hope you're out there living free. I'll see you on the next video. Peace.